From Washington, this is the HPS Macrocast with Hamilton Place Strategies and Markets Policy Partners.
Good morning. It's Friday, April 9th, and you're listening to the Macrocast. Tony Fratto here with Hamilton Place Strategies, John Fagan and Brendan Walsh with Markets Policy Partners. Guys, we had a weird start to the Friday today with the delayed release of the PPI report from Bureau of Labor Statistics. Their website was down. This was a highly anticipated PPI report, as much as a PPI report can be highly anticipated. But this one, people looking for, everyone looking for clues about inflation, and there's a debate as to whether it's temporary or not. As Chairman Powell repeated yesterday, belief is that we're going to see a temporary bout of inflation, but now we're seeing it, and we certainly saw it in the PPI report this morning, didn't we? Eventually.
But wouldn't it be more concerning if we didn't get inflation coming out of a pandemic?
Yes. Well, yeah, not just coming out of the pandemic, but coming out of the what we know are a flood of money into the economy, plus certain supply shocks as people, as we have the rolling vaccinations, and people are the vaccinations, I say rolling, they're roaring now.
Roaring, yeah.
It is a very, very high clip, but it's not. That's certainly not the case around the world. I mean,
no, we had lunch with an Aussie friend, and Australia can't get the vaccine because they bought it from Europe, and Europe won't send it to them.
Yeah, I know of companies that are flying their, some senior officials to the United States to get the vaccine because they can't get it in their home countries. Which is to say, though, that it's an uneven vaccine distribution, and we know that the macroeconomy is so tightly bound to the vaccination rates right now, even anticipating it and vaccination rates. People are returning back to normal and becoming sort of, now supercharged economic actors, but that's not the case everywhere. And so, so we're going to see, high demand, but even uneven availability of all kinds of things, whether they're, semiconductors or components or certain products that rely on production in parts of the world that are not as far along in their vaccination rates.
So Tony, do you know if we have plans to send once we're all vaccinated? I know China is using the vaccine as a form of diplomacy. Are we trying to do the same thing?
We have committed to do the same thing. I'm disappointed in our in what we're we're not doing it. We're not sharing enough, and certainly not in any strategic way, and that's a problem. I think there are ethical problems to that. There are certainly economic problems to that as well. The effectiveness in reducing the spread of the disease is going to have economic consequences, but it's also going to have consequences for the eventual spread of the disease as well. So
yeah, and mutations can happen, and then maybe this vaccine that we have doesn't work against that. Yeah.
Right. This is one of it's if it's raging somewhere, then there's a greater likelihood of having mutations of it. So that's why you want to try to.
Yeah, and we know it's raging in India, which has 1 billion people.
Raging there, we've seen
in Brazil too, yeah.
Already in Brazil, and Brazil's in a very, very bad shape. A place I know very well. I in normal times travel there once or twice a year, and care about that country quite a bit because it's in a very difficult place right now. But so it's not just the sort of normal use, but the U.S. government is also sitting on a stockpile of something like 20 million doses of AstraZeneca vaccines, which we have not approved for use. So we are not using them. Canada and Mexico have approved them for use. And, at the very least, it would be in our interest to share it with our two major trading partners. And
no, because we're never going to use AstraZeneca. We don't need it, and people won't trust it. So why are we sitting on it? Why aren't we sending it to Mexico?
It's really disappointing,
Yeah.
and it's going to slow down the broader global economic recovery. Now, World Economic Outlook from the IMF and the World Bank this week is still predicting a very large boost to the global economy. They upped their expectation for 2021 to 6%, but that is largely driven by what we're seeing in China and the United States.
Yeah.
Those two giant anchors. Other countries will rebound as well as the year goes on. Europe eventually, as they step up distribution, will rebound, and other countries will follow. So you're going to see, so that's 6% global growth. We're expecting something on the order of 8% growth in the United States. China is going to have very substantial recovery. And so you're going to have some very big economies doing very, very well, but some other, large economies around the world still struggling. India, actually, I think even though the pandemic is still raging in India is going to have a very strong year as well.
Yeah, that's one of the key aspects about these forecasts. The Fed has said it, and global policymakers have emphasized that, in the past, you might make policy and in anticipation of some of these forecasts coming true if you have a relatively high conviction. And clearly there's a relatively high conviction in the U.S. rebound here. But from the Fed to the ECB to other global economic policymakers, they've all spoken largely with the same voice, saying we're not going to make policy this time in anticipation of our forecasts. We need to see it. We're not making policy based on a dotted line or extrapolation or what we think is coming. We need to actually have it be in reality in front of us. And not only that, and this is something that they've brought up, particularly with reference to the inflationary picture. Even if you get this temporary, transitory boost in inflation, surge of growth, policymakers will not just be, absorbing what they're currently seeing, but also trying to cast ahead to the post-surge kind of environment when things settle down and normalize, and you come past some of the base effect distortions that we're going to be seeing, some of the initial rush out to go out to your favorite restaurant again, which is something that Brendan and I did last night, and sat outside and had an enjoyable blast from the past and a pleasant return. But that's, that is going to be something that does play through, and, the real economic baseline is going to be behind these months of excitement and enthusiasm. And this is going to be, of course, rolling out across the globe as vaccine distribution rates expand and distribution grows in some of the places where it's lagging right now, like Europe, like emerging markets. It's a very unprecedented kind of global growth picture, and policymakers are in a very Hippocratic oath, do no harm approach to it. It's a they've got a very credible story about transitory inflation, and it gives them the justification to sit and wait. But markets aren't convinced that the Fed is really going to hold to its patience.
How do you think? A report like today factors in it. I mean, we'll see what market reaction is. The futures moved a bit, but market expectations were for it around 0.4%. Headline, right? 0.4. We got 1%. I think core was 0.7. So exceeding expectations pretty solidly. You get the feeling this is like the Fed in every opportunity is telling people, look, you're going to see it, it's coming, we're going to power through it, and then it's going to be okay. it's like the space capsule re-entering the the atmosphere. It's like you're going to go through this, make sure the heat shields work, right? You're going to go through it, but don't panic about going through that, when you're a fiery ball, because you're going to get through into the atmosphere and it's going to be okay. But you can imagine how easy it would be to panic when you're a fiery ball. And if we're a fiery ball for the next year of inflation at levels that we haven't seen in a generation, it's going to test the discipline of both the Fed and the market to not do anything about it, right? To not go and not pressure rates higher, and so this is an experiment.
Yeah, it's going to be
the
a real
way you
challenge.
described it. I think is really important when you said generation, because this is a sociological experiment too. We have a large percentage of Americans that have, not just Americans, but the world, that have never experienced high inflation.
Yeah, when I was a young economics student, and my fresh textbooks, we're all talking about inflation that all of us had experienced by looking outside the window and going to the store,
Yep.
And so it was a thing that we were very, very familiar with, and we knew our parents, had were buying homes with interest rates, double-digit interest rates, and this generation of people. In fact, you guys probably, it was a historical artifact.
I was born in the late 70s, so I never really. Yeah. I was born when we got control of inflation. Yeah.
I remember asking during the Carter years, I remember watching our black and white TV, and there was a news segment on inflation, and it showed, shoppers with their brows furrowed with concern in the aisle of a supermarket. And I remember dashing out to my parents in the kitchen and saying, what is this inflation that seems to be haunting supermarkets? It was, and I was worried that I might get jumped by inflation the next time my mom took me to the Stop and Shop. But
it was a really big deal, and not just that, like, for a bunch of economic eggheads. It was very real, and in supermarkets and gas stations. And gas stations, the oil shock. But you had the Nixon administration, imposed price controls. You had the Ford administration with its wacky whip inflation now, whip inflation now buttons, and its efforts to try to tamp down inflation. And of course, it wasn't conquered until Paul Volcker, broke its back by instilling the credibility in the Fed to do whatever it takes, and to be, in the face of fierce attacks and a recession.
That Volcker credibility, that bedrock credibility of the Fed as an inflation fighter, is still with us. And that is, you can see on a day like today, you don't want to put too much stock in one day's price action, but we've seen this again and again, a hot inflation number. What happens in the markets? The dollar jumps, treasuries sell off, yields go up, futures markets pull forward their expectation for the first Fed rate hike. The, equities are supposed to be an inflation hedge. Equities sell off, gold sells off. This is a reaction not to, the market is predominantly reacting to what they think the Fed's reaction is going to be to inflation, which is, if inflation is hot, they're going to taper their bond purchases earlier, and they're going to pull that first rate hike from 2024. The median is going to creep into 2023, and soon enough we'll see it, knocking on the door of 2022, which is just where the futures market is kind of on the cusp of pricing that first rate hike. The Fed has so much credibility built up as an inflation fighter, and they've been trying to tamp that down with their current messaging, but the market just doesn't believe them. So when you see this, the reaction to inflation has been, inflationary trades kind of going in reverse. So, and we've seen that with, you bring up the 70s oil prices. Oil prices hit a high of 70, Brent was up to $70 a barrel. It's down 62. And it's selling off again today.
Yeah, it's just
the dollar is higher. It's hard to get it's hard to get through this. The market reaction is actually pushing against the inflationary pressures.
But the dollar is a really good point. It's really hard to have runaway inflation if the dollar is not significantly weakening.
Yeah. And that is and it's not just reflective of the U.S. economy, right? It's
right.
If we're thinking about the dollar, we're thinking about it relative to the pace of growth in other economies around the world. And
goes back to the vaccine and also our stimulus. We're spending a lot of money.
We're spending a lot of money, and a lot of it is resulting in obviously in asset inflation. And if you want to partake in that, you got to buy dollars to do it. So that makes inflation really hard to generate.
No, it's an important point because so much time we talk about the dollar, we think of it as people trading it, but that's not really what drives a dollar. It's corporations that just have to exchange. You buy things in the U.S., so you have to get dollars.
Yeah, you're either going to buy something, but if you're going to buy any kind of asset here, right? If you want to buy an apartment in New York City, or GameStop or whatever it is, they're like all of these markets matter, right? But you have to trade your euro, whatever else, into dollars in order to do that. And I mean, look, that's why you always want to be an attractive destination for investment. There are dollar traders out there too, and we know that the dollar is used as a medium of exchange around the world between countries that have nothing to do with the dollar. It's just easy, it's easier to trade. It's easier to conduct your transactions in the dollar than it is to exchange, maybe,
renminbi.
Easy.
Yeah.
They're trying to do something about that with the digital renminbi. We'll see, though.
Yeah. But maybe this is a good time to take a break. But when we come back, Tony, I want to talk to you about the proposal to pay for this infrastructure spending, and especially with the international tax minimum rate.
Definitely. Let's come back and get into that. You're listening to the Macrocast.
Markets Policy Partners provides sophisticated financial market analysis that is independent, accessible, and actionable for a broad audience. Learn more at marketspolicy.com or visit them on Twitter at marketspolicy.
We're back on the Macrocast. Guys, the Biden administration rolling out its infrastructure plan, and it's a couple $1 trillion worth of spending, and a lot of debate on whether what is in it is or is not infrastructure, and what share of it is actually like the traditional kinds of infrastructure we think about as surface transportation kinds of things. You have electric grid in there. You have electric vehicles. You also have things like home care for the elderly, and schools, and a lot of other things. Congress will debate the composition of the spending side of it, but you mentioned, Brendan, before we broke away, on the tax side of it, on how to, the question of how to pay for it. I actually think it's crazy that we are so vexed about how to pay for,
especially infrastructure spending, something that has a return, on it.
Yeah, you borrow at zero and it has a return.
Yeah. Or the private sector would love to fund it too.
Right. So it's really, it just drives me crazy that we have not invested decade after decade because no one wants to do the things to pay for it. And I always say, I don't know, why don't you just borrow the money? We borrow money for consumption. Why don't you borrow money for something that has an economic return? Exactly. We borrow money for all kinds of things, except infrastructure, the one thing that actually does generate a return. And so it's
we've talked about this before. The pay for it with corporate tax rates, corporate tax hikes. There's an element there of a little bit of showmanship, right? The idea of raising corporate taxes is something that the Biden administration wants to do anyway. This is part of what they see as correcting some of the excesses of the Trump tax cut. Even Gary Cohn, the former director of the NEC, came out and said that 21 was a little bit low for where they think it really could have been the sweet spot. And so we're looking more at like 25%, something like that, 28% potentially. But it looks like with Senator Manchin holding at 25, that may be where we go. Like the idea that this is something that our concept is that marrying it to the infrastructure bill and saying that we're paying for infrastructure with corporate tax hikes is a way to kind of, grease the skids for a corporate tax hike that they were going to do anyway. And in reality, they really don't have, as you both said, how much is infrastructure really going to cost? And so many of these projects are going to pay back and or be funded in large part by the private sector.
Yeah, and it's also going to take 8 to 10 years to do these things. So it's not like you have to write the check on day one.
Right. So we think that there may be a little bit of gamesmanship going on and sort of linking the tax hikes with infrastructure.
Yeah,
and we don't think that
putting together, political coalitions to pass legislation. I mean, that's to your point. I mean, it's like you don't have to tie corporate tax increases to an infrastructure bill. But as you rightly pointed out, John, it's something they do want to do and have wanted to do. Tying it to a bill that has a lot of money for states, and we're going to reintroduce some, earmarking, and money for old people. And for one thing that, my many decades in Washington have told me is don't bet against, votes for old people. Right. So, and so that's what you have this in here. So it's going to be very hard for a lot of members not to vote for this thing. I don't like it. Right. I mean, I'd still rather see, I would much rather see, if you have to pay for it, to do it in the traditional ways that we've done and some non-traditional but similar ways, we haven't raised the gas tax in decades. So that was created for the purpose of funding infrastructure. We know that we're going to be moving to, and part of the infrastructure is investment in things like broadband, like the grid. We know that we're going to be investing in charging stations around the country. Those are easy places to monetize a fee to pay for infrastructure. There's no reason why you should impose a cost on the global operations of a successful American firm because you want to put charging stations in, places that are, maybe the economics of it don't necessarily make it a logical place to go.
We have a lot of charging stations and they've been funded privately. So far.
Yeah, and we suspect that there are a lot of elements of this infrastructure plan that are going to be funded privately, and it's going to be public money priming, doing some pump priming. Obviously, some public money is going to be dependent upon for some of the traditional infrastructure project. But how many billion for electric vehicles? Last time I checked, the market is falling all over itself to invest in electric vehicles. So, there are going to be some pockets of this money that probably are set aside for, they're passed under the idea of paying for electric vehicles. But in reality, where the rubber meets the road, so to speak. And you bring up a gasoline tax, there would be, given the focus on electrification, the gasoline tax is seen by policymakers as something of a wasting asset. And if you put your revenue, you tie your revenue wagon to the carbon, it is an incentive that you want to depress. Taxing something like gasoline may depress demand for it on the margin and push people into electrification, but it fights against itself as a long-term source of revenue.
No doubt, but that's why. But you could put in place. There's no reason why you couldn't have an electric charging tax.
Exactly.
Or attach a fee to the grid, right? There are all kinds of ways, like all of these things are already monetized. Like the hard part of finding, transportation related fees is things like, the interstate highway system, which are non-tolled, right? And they have lots of, expensive things like tunnels and bridges also, and they have long-term maintenance needs. But those things are hard to monetize. Broadband, the grid, like all kinds of ways to monetize those things. Like, electronic charging stations, easy. You already pay for them in most cases, right? So like these are easy things to do, to essentially have user fees. And if you want to do that, and I take your point on the gas tax. It is a wasting asset, but their view on the corporate taxes is that essentially that it's going to pay back for this entire thing over 15 years. And then what? After you've paid for it and you've penalized American companies,
right?
Does it go away after 15 years? After you've,
I think that really, they're not really paying for it with this corporate tax hike is going to pay for Social Security and social payments. I mean, our fiscal future is really parlous, and so the idea that this is going to pay for a big infrastructure push and then be rolled off. I think that the long-term revenue needs are squarely in focus.
The other issue with the corporate tax, not just the rate, so Biden administration wants to go to 28%. As you said, I think it's more likely if it goes, if it's successful, it's wherever Joe Manchin wants it. And he's indicating 25%. The international piece of it, it's been a long effort to in the United States and really for most times unique to the United States. This interest in getting at the global, the profits of firms that have global operations. No other country does it. And in the 2017 Tax Cuts and Jobs Act, TCJA. They actually, put in a provision that's way too complex for this show to go into any depth right now, but a kind of minimum tax that actually has bite that U.S. companies are having to pay taxes on their foreign corporations, and that's why I do get a little frustrated with my friends at the Treasury Department and the White House. Essentially calling these firms tax cheats when they're literally the only countries in the world that are paying taxes on their overseas profits. The British companies, French companies, Korean companies, Japanese companies, China companies do not have to pay this. That's why there's, part of the Janet Yellen's, Secretary Yellen's announcement this week was also this part about going to the OECD to try to advance an ongoing process to try to put in place a global minimum tax, which I think a lot of people would like to see, and probably a lot of companies, if it's set in the right place, would not object to it. But the implicit message was that if a country were to go it alone in raising their corporate taxes, they're going to be at a disadvantage. The whole message of this quote unquote race to the bottom, that we need all the countries to do it, is that if one country has higher tax rates, they're at a disadvantage. You're saying that at the same time you're proposing to unilaterally raise taxes on American companies, and so. So I think, look, we're going to have this fight over the next few months on this, and I know where I'll be on it if it wasn't clear.
How do you think it ends up playing out?
I think we're going to work very, very hard, we at HPS, and to try to. Point us towards, if there's going to be action on international tax, that it is in fact something that goes through the OECD, that the United States does not unilaterally impose these taxes and I think an unfair system on American companies. I just think it's I know that they're easy political targets, but it's a self-defeating policy if we aren't doing it in lockstep with the rest of the world.
Our producer Mariel is very persuasive. I'd make her point person on this one.
She's got a full workload already. Hey, why don't we take a last break and come back and take a look ahead?
Check out HPS Insights, a regular podcast from Hamilton Place Strategies, bringing you the latest on policy debates affecting the business and political communities. Available on the HPS podcast channel on your favorite streaming platforms, including Apple, Spotify, and Google. Tune in to the latest episodes and learn more at hamiltonplacestrategies.com/podcast.
All right, we're back on the Macrocast. Guys, before we take a look ahead to next week, yesterday we got initial weekly claims data that was surprising in that it was actually an increase in claims just a week after we got the monster payroll data of a million jobs created. Did that surprise you guys? And is there something? What do you see in the data there?
So 3 weeks ago, we surprisingly dropped to the it was 40,000 people filed, and we had been running at 750 or so. And then the last 2 weeks, we went back kind of to that 750 range, which, I mean, claims are a little quirky and sometimes one big state, doesn't report. We also have the Easter holiday around it, so you can have seasonal adjustment issues. But I actually think it's somewhat the reality of reopening an economy from a pandemic. It's going to be choppy. We had almost 1 million jobs in March. Maybe April's negative, and then maybe May is 5 million. So yeah. It's gonna be weird. It's not gonna be like anything we've ever done before. So I think you have to not get too caught up, especially in the jobs, in individual price points, and just kind of focus on the big picture that people are getting vaccinated, and hopefully companies are reopening.
What do we got next week?
CPI and retail sales in the U.S. are kind of the two big ones. And then globally, we get a large amount of industrial production data points. So that'll be interesting, especially going back to talking about how countries are doing differently on the growth aspect. Industrial production is a good one to watch for that measurement.
Yeah, that divergence between the U.S. and EU, it's certainly being played out in the currency markets, with the euro weakening pretty considerably so far this year, and expectations that, eventually the vaccination distribution will catch up. That restrains this price action to some extent. But in the near term, the divergence really is going to be pretty stark. And with Europe going into a variety of different lockdowns and very low distribution of vaccines so far. And also, they're still wrangling with, we talked about it last year, the passage of their 750 billion euro pan-European pandemic relief stimulus package. It's still working its way through the process. A German high court just held it up. The ECB officials are coming out and tearing their hair and pleading for this thing to get through. And maybe by September, we're going to see something.
It's just staggering.
Yeah. Prime Minister Draghi in Italy is pulling forward his borrow. He's not waiting around. So he's pulling forward borrowing and doing it. And that's consistent with the theme that we've talked about, which is the center of gravity of political power in Europe is moving south. And, with Chancellor Merkel leaving the political scene, and French, political warfare domestically, where's the leadership? And really it's the Draghi-Lagarde combo there.
Yeah. He also called Turkey a dictatorship. So he's really taking control of your...
Super Mario is one of our favorites.
He's the best.
Yeah. All right, guys. I'll tell you what, I know I'm going to have a good weekend no matter what happens. I get my second Moderna shot tomorrow. So I'm pretty excited about that. Have a fantastic weekend. We'll catch you next week on the Macrocast.
Thank you for listening to the HPS Macrocast. Please remember to subscribe, rate, and share.